This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hey everybody, welcome to the Weekly Wrap Up. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Interesting day today. Inflation data, not good. PPI data, which is Producer Price Index, came in sharply higher. Take a look at the bottom of your screen. Year over year, 2.9% versus 2.6% forecast. Month over month, 0.5% versus the 0.3% forecast. And look at the core numbers. Core, remember, is minus food and energy. So it's everything but food and energy. And look at those numbers. 3.6% versus 3% forecast. Core 0.8% month over month versus 0.3. Now, think about this. We were just discussing how inflation could be between 2 and 3%. Now we're looking at these core numbers, 3.6%. We're talking about between 3 and 4%. So this is a big deal. Now, the markets did take it in stride today, and we'll take a look at that. Let's jump right into the S&P 500. This is your intraday 10-minute chart. And what we see here is that we opened lower, floated up a little bit, came back in, and then floated up into the end of the day, but still net negative on the day. The S&P ended the day down 0.4%. Flipping over to the daily chart, here we are. And you can see the S&P has just been in a flat range, a choppy sideways range since the start of the year. Now, if we look at the bigger time frame, this is where stuff gets scary, right? Is that we are at the higher end of a range that has denoted every major top and bottom in the markets, right? The bottoms of COVID, bear market 2022, liberation tariff sell-off low, and the bull market high of 2021. And so again, this is where we're going to come into a move in the market. One way or the other, we're going to see a bigger move. I'm continuing to watch this 67.90 level right here as the break point to the downside. Why? Because again, there's a head and shoulders pattern that's been developing here, which is a bearish chart pattern. And again, if we break this 67.90, that's where you get the bigger flush to the downside, likely towards 6,500 on the S&P. All right, there is complacency. I think, again, even though the markets are kind of skittish, if you look at this, we go up and down a few days in a row, right? So up a little bit, down a little bit, up a little bit, down a little bit. And that kind of creates this scenario for most investors of just a market that is going sideways. There's no real fear there. In fact, if we look at the VXX, and this is the VIX tracking ETF, look at this because this tells us something. The VXX, which tracks volatility, meaning it jumps on fear, it's banging on a resistance trend line here. Now, notice how you have a trend line here on the VXX, right? So if this breaks out, this tells you fear is going up, and it tells you that the markets are obviously going down because that's when fear spikes. Then if we flip back to the S&P 500, we have the opposing trend line right here. And so the thesis would go that if we break this trend line here, that's where the VXX would break this and start getting that bigger spike. Amazing how they're coordinated like this on the charts. All right, so again, overall, chart signals remain strongly bearish on the market, even though, again, the S&P is virtually unchanged for the year. Now, the NASDAQ is no better. In fact, the NASDAQ dropped more today, down 0.9%. You have the same general trend line right here on the NASDAQ. If this gives way, you should get a much bigger rollover in the NASDAQ across the board. In fact, I continue to have a downside target by mid-year of this $20,000 level. This would be about the midpoint of the bigger parallel here on the NASDAQ. Again, if you look at the midpoint, where's the middle point? From this high down to this low of the parallel, that would be right here at 20,000. That's my near term or next 3 to 6 month target. We should bounce off of there sizably. And then by year end, I think we have a good chance to come down towards the low end of this parallel. Now, with hotter inflation data, and this is where things get even scarier, right? There's a bunch of kind of things out there that have me on high alert. So again, if you look at the data, inflation going up, you would think yields, the 10-year, the interest rate, the 10-year yield would actually rise on this, but it didn't. And this is what is kind of, again, a little bit of an alarm bell for me, because when you look at this, and let's go to the 10-year yield chart, you have yields dropping massively today. For yields, this is a big drop. down 1.4% or 0.057 ticks. But this trend line break is significant. Why? Well, because number one, this is now a breakdown on 10-year yields. And remember what I just said? I just said, well, higher inflation rates should go up, right? The Fed should be less likely to cut rates because inflation is higher. They might even have to raise rates. The reason why the bond market, or what the bond market is telling us by rates going down, is that even with higher inflation, the economy is slowing very quickly. And that's scary because that is the definition of stagflation. So again, something to keep in mind here is that interest rates going down, that means economic activity or is likely going lower. Recession is possible by year end or early 2027. And ultimately, inflation staying elevated is a recipe for disaster. All right. Overall, I want to show you some key stock movement here. So again, Nvidia just continues to fall. Another down day on Nvidia, down over 4% today. If we look at this, this is remarkable. Now, remember, Nvidia had great earnings and great guidance. From the highs going into earnings, it's down over 10%. That's about $500 billion with a B, $500 billion in market cap lost from, again, a couple days ago, the highs to where it closed today. Massive destruction of capital right there. But more importantly, what I'm watching next week is this trend line. Look at this. Look at how this trend line right here, we have this area right there, and then you can see right here. Then it did break up and come back in, but then it reestablished and hit, and right there. And then you have the lower area all along here telling us this is a key level. And look at what we're doing. We're coming right into it. So does it bounce? Maybe you get a small bounce early next week, but if this trend line breaks, you're heading all the way down to 150 on Nvidia, which would be the 2024, early 2025 highs on the NVDA chart. So watch this closely, guys. This one to me is the market at this point because the market cap is so big. It's also one of the few mega caps that has not had a massive correction. Remember, Microsoft. I mean, look at this. Microsoft's had a massive drop. Meta, massive drop off of its highs. Amazon, massive drop recently, little bear flag starting to form. And so again, there's the only one that has done relatively well because of AI, and this is even off of its highs, is Alphabet, which again, is this to me, and again, I'm just calling it like the charts tell me, this down move inside bar action, a warning sign of further downside to go. Now, we have to talk about even more scary stuff. And now listen, I wish this wasn't the case. I wish I was out here saying, oh, markets are cheap, but this is great. Let's all go along. But my job is to look at the charts and decipher them as breadcrumbs, right? Pieces of the puzzle telling us what the markets are saying. And ultimately, today, what we saw is the financials getting wrecked. Now, why are the financials getting wrecked? So look at Goldman Sachs. Goldman Sachs broke major support here. I repeat, major support breakdown on Goldman Sachs. Look at American Express, AXP. Look at the drop on this thing. Just today alone, it was down 8%. This is American Express. This stock does not move 8% in a day on a regular basis. This is an abnormal move, and it's been collapsing. The kicker is this, is that we're starting to see this private equity or private debt bubble, and it's starting to implode. And this is really where the markets, if we start to break down, I think this is all encompassing. All right, you have the private debt bubble starting to blow here. A lot of these banks have exposure, and that means losses on their balance sheet. And if you look at the charts, I mean, in fact, let's go back to Goldman Sachs and take a look at this. When you look at Goldman, I'm going to get rid of this trend line. Look at the monthly chart on Goldman. If you showed this to me and you said, hey, this is a AI stock, I'd actually believe you. If I didn't see the symbol right here that says Goldman Sachs, GS Goldman Sachs, you could fool me and say this was an AI company because of the vertical nature. I mean, look at JP Morgan. JP Morgan, same thing. These charts have traded ridiculously as if they were invincible. And now all of a sudden there's a private equity bubble bursting and they have exposure. And investors are caught off sides and they're starting to correct. These likely are going lower in the next couple of weeks, sharply lower at that. And if it escalates, it could be a massive potential black swan event, as something very a la the credit crisis or the financial crisis 0809. Now, I don't think it would be as bad as that, but if it is contagious, then that's where things could get very messy. Now, but wait, there's more. Another scary headline today that really struck me. XYZ. Stock is block. XYZ is the block, So this is the Jack Dorsey company, XYZ. I'll bring it up on my charts here. So let's take a look at this. Okay, so the stock today, here we take a look. The stock today was up. Nice day. You'd say, oh, wow, that was a great day. Yeah, it was. 16 to 17% gain. But the headline here is what scares me. Jack Dorsey block, they laid off 50% of their workforce. Why? Because AI is going to take those jobs. They just said, all right, we don't need you anymore, 50%. Now, you could say this is an outlier. This is not going to happen. You'd be lying to yourself. All right. Something I've said for a long time. And again, I've been warning about this is that AI, especially as fast as it's improving, is going to take a lot of jobs. And you're going to have employment going much, much higher. There's going to be a bigger divide between mega wealthy that own the AI technology and people that are getting laid off. I mean, this is something that we are just in the infancy and it is just beginning, but it is something to take note of. And the reason why that's a negative is that, sure, the ultra wealthy will get richer, but when you take away and you take, let's say we go to an unemployment rate of 12%. I mean, like that would be crazy, but 12%, let's just say 15%. Those are all consumers that no longer are spending money, and that will affect corporate profits overall. So there is a chain reaction here overall, not just from the unemployment, but through the economy. All right. In any case, let's look at some positives. So we had Netflix today. Netflix rallying up. Why? Because they are now out of the bidding for a WBD, Warner Brothers Discovery, right? And so this is such an interesting scenario where Netflix, as they were trying to buy Warner Brothers Discovery, they were paying a boatload and the market did not want them to buy it. And you see the relief rally today. So all of a sudden they lost out. They stepped away. They said, nope, we can't compete with this latest bid from Paramount. And what happens? The stock rips up. What a great rally. Now, listen, was this stock over? I mean, look at this. Nonstop down for literally 2 to 3 months. So sure, it was due for a relief rally. Absolutely. Now, how high does it go? It's hard to know. I think this could go maybe up to about 103, 104. Then I would start to get a little bit nervous. Certainly at this point, I'm not buying it up here. It's way, way too high on the chart. But that was a massive move. Look on a percentage basis of this. Look at the run from this low just a few days ago, 28% rally. That's one of the positive side. Another one this morning in my game plan. So again, if you're just watching this for the first time, Fridays I do a weekly wrap up at 4:20 p.m. But Monday through Friday, I do the game plan, which is 9 o'clock, Monday through Friday, 20-minute long show going over all my levels, my trades, etc. This was one. I said, guys, this one is very similar to ones I've given prior in the game plan. Watch this thing. It should rip higher. And look at this. Holy cow. This was trading when I was doing the game plan this morning. This was trading at around $85 to $86. If you bought it, you literally surged in the first 30 to 40 minutes to $100. All right. We're talking about basically being in a trade for 30 to 40 minutes, making 17%. Incredible. Now, why? Well, number one, I mean, huge support down here. Epic support. And look at the chart. It's very a la Netflix, which we just looked at. So again, when these stocks gap down on bad earnings, what we're seeing lately, and we saw this with Workday, which was another one I gave out, it gaps down and rips higher because the bad news is already factored in by that fall. This is human psychology 101. All right, let's get into gold, silver, and eventually Bitcoin, oil, and natural gas. Silver today, good day on silver. The kicker on silver is it closed above this key 92.93 level. If it can confirm on Monday, it should head back above 100. Now, part of me thinks that the metals, and we can look at gold rallied today as well. Part of me thinks that, and this is partially from the move on oil. Oil was up today. Part of me thinks that if you remember about a week ago, the president said that Iran has 10 days before we either have a deal or there's military action. And I do think that there's probably some safe haven buying in the metals going into the weekend, thinking there could be military action. And that thought process is confirmed by no other than oil popping today as well. Now, again, we'll see what happens Sunday night when the futures open. We'll see what happens over the weekend, but certainly something to keep in mind about the move in the metals. But again, just going back to silver here, if silver can confirm above here, you likely are headed back to this 103 to 104 area. That will be your next resistance. All right. But I want to see if it confirms on Monday. It's great move since really mid last week. We went from 72. Now we're back to 93 to 94 on the price of silver. Now, oil we talked about. Let's quickly touch base on natural gas here. And if we look at nat gas basically didn't do a thing. But again, it is right into some decent support down here. So might be due for a little bit of a bounce next week. Lastly, Bitcoin, guys, taking a look at Bitcoin. It was down today, and it is down today about just under 3%. Still inside of this green candle. So it could be looked at as still being bullish. I'm actually still bullish on Bitcoin. I still think this bigger pattern is bullish. And then now you have this smaller pattern. As long as we don't trade and close below this green low, then this remains bullish. And I actually am in the camp that right now it favors this type of move and then eventually a breakout to the upside. So we'll watch very closely and see how it goes. The altcoins, we know the altcoins had a massive move earlier this week, which I had called for in these videos. And ultimately, I still think they have a little bit more upside to go as well, maybe even as much as 20% more than they've already gone. The question again is, can we maintain the structure on Bitcoin and get the breakout? If the breakout comes, all the crypto markets should get a bid. All right, guys, I'm going to get going into the weekend. As always, I live and breathe the markets. Verified Investing is here for you, keeping it all about the charts and the data and leaving the hype behind and the BS behind. Thank you guys for tuning in. Please share with friends and family if you like this, and I'll be back Monday morning, 9 a.m. for the game plan. Take care.